Hey, how's it going? We just got the closing bell for Tuesday, September 3rd, and it was nothing but a down day today. You can see that from the very beginning, the S&P 500 started to sell off and it kept on going. I had the feeling that it would stop at 555, but nope, in the middle of the day, we just kept on going down, reaching as low as around 550, and then recovering into 522 or 552 as we closed. So we can see that one of the reasons why I expected to stop at 555 was because that's where all these lows over here are. That would have just made it a choppy sideways day. But as it is, it kept on going. It broke that level and it actually even broke the EMA 20 and it came very close to the MA 50. And we have some reasonable volume right here. We're at 46 million, and that's before dark pool. So dark pool will probably put us above the moving average. That's a little surprising because we just had a holiday weekend. Normally it takes some time for institutions to come in, but it does looks like there was some institutional participation, and we'll see. We'll see if this lasts. I think this is a little much, a little too much too fast. I think that we'll probably bounce off of this MA50. We might trade down to the MA50, but for now, I believe that will hold. I think what we got today was a little bit of, there was a lot of news, a lot of people talking about how seasonally September is the worst month. Seasonally, September is a bad down month. So I think a lot of people played into that and just sold off. I think you'll find some support here. I think institutions will come in and buy some. I think retail traders will come in and buy some. Usually what happens is we have this sharp sell-off and you have a scramble of retail investors trying to sell so they don't keep on losing a bunch of money. And what we found was that over here, that's where institutions bought. That was the 1 billion that institutions bought and 14 billion that retail traders sold. So now that we come all the way up here, if we get a little bit of a pullback, then people go, oh, well, we've seen this before. Let's buy it. Let's buy it because we think that the market is going to continue to move upwards. And then that'll push us back up a little bit. Then we'll get another pullback that was probably a little bit deeper. And then people might bid it up again. And then that's when we get the real crash. So right now, what it's important to realize is that for all year and even part of 2023, this has really been a momentum market. It's been really, really like very few mean reversions, almost just that one pullback, was this even a full correction? Let's see. Why isn't this? Oh, here we go. Yeah, that's a full correction. So we had one pullback, one correction. We have probably another pullback in the works for us this year. So we could get another pullback and then people get enthusiastic. And then that will probably get us reasonably close to the election. And then all bets off. It could very possibly break and crash at that point. So we were in this momentum market, meaning that it just kept on going up. There's a few pauses here and there, just tiny, 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 tiny mean reversions. And then we got that pullback and then we continued with the momentum. Right now, what this looks like is a break of momentum. You had a deep correction. You had a recovery, not quite to the previous high, a consolidation sideways, and then a little bit of a pullback to the MA50. And this is a topping pattern. This is indicating that we shouldn't be trading momentum anymore. We shouldn't be trying to trade breakouts. If we see something break a new high, we shouldn't get super crazy enthusiastic about it. What we should start doing is coming back to this mean reversion mode so that when we come to interesting levels or levels that are meaningful to the market, that might be an okay time to buy. But we want to be very, very careful right here. So like I've been saying the last couple of weeks, there is more risk to the downside than there is to the upside. And today definitely proved that to be true. I'm glad that at least in my portfolios, if you've been following that, we kept the tail risk trades on to the downside. That definitely helped out today. So I believe that this week, with the employment situation coming out on Friday, there's no real reason for this market to sell off. So I think that MA50 will probably hold for the rest of the week until we get to Friday, when we get the employment situation. Then we'll see. Thursday, even, we have what was it? Broadcom? Yeah, Broadcom is reporting Thursday evening, so that'll affect us on Friday also. So if Broadcom reports poor earnings, that's going to go and affect the AI stocks quite a bit. So that we still have potential downside over here. SMH, we really pulled back to the moving average, the annual moving average. This is going to be very critical. If we see this break, that's an indication that institutions have already left the market in these semiconductors. So otherwise they would defend it. They would defend this because this represents something pretty close to their average price. And if it goes below that, then they start losing money. So either this is a strong campaign, sell campaign that they couldn't defend against, which is unlikely given the amount of volume that we have, or they already took their profits and they're out and they don't care anymore, and this will just trade right through it. So we'll see. We'll see what happens probably tomorrow. We'll see. And if institutions are still in here, you may get a little bit of a bounce. I'm probably going to take profits over here since we're already at that VWAP. So where we want to see really is this rotation. So if we look at the SPY, oh, I guess I should look over here. Today, you can see that SMH led the way down. We also have XLK. Those were the two weakest sectors. On the way up, we had real estate. We have consumer staples. We have bonds. And this, I can't see which one this is. Maybe home builders? No, that was gold. And this one's healthcare. So you can see very defensive sectors. So when the overall index is coming down, the defensive sectors went up. And obviously XLK and SMH went down also. If we do get a bounce in the markets, then the ones that did poorly are the ones that are going to recover the best and fastest. So either this is going to continue to break down and we will continue to see these utilities and staples continue to do very well, the defensive sectors continue to do very well, or we'll get a little bit of a reversion tomorrow, because if we start to chop sideways, if this EMA 20, MA50 region holds and we don't break further down, then we could see that reverse a little bit. But most likely tomorrow, we are going to challenge that MA50, since we already came pretty close to it today, if we see that continued downside movement. And then if we just pounce, then we'll just consider that a bounce near or off of the EMA 20. So we'll see. Because it's a shortened week, because it's a vacation week, and because we have the report, this employment situation on Friday, it's a little bit more likely that we bounce a little bit, maybe not recover all the way, but at least get a little bit of a green bar, or even if it's a red bar, we don't get a new low and start to chop sideways at this lower level into Friday. And then Friday is our next chance at a bunch of volatility. So VIX did spike up today, though, above 20. And that'll be really interesting. If VIX stays up there, then we probably have more downside to go this week in the S&P 500. And this is starting to see, if we look at it without any lines whatsoever, you can see that this is starting to curve down. This low did break all these lows right here. So this is looking more like a 90-10 type of pattern, where we move up, we make a high, not quite a 90-day high, but we're pretty close to this 90-day high level, and we consolidate over there. That acts as a strong resistance, and then now we're starting to break down, and so you're starting to see that curve. So there is a chance also that we start moving downwards. So like I said, there is more risk to the downside than there is to the upside, but there is always the chance that we chop. So right now we're looking at either chopping or continuing the move to the downside. And for now, my belief is that the higher probability, slightly higher probability, is that we'll chop sideways a little bit. That doesn't mean we can't get into position. So in our portfolios, we want to be neutral to slightly bearish at this point. It's not good news for the S&P 500 that this broke through. It's not good that the QQQ completely broke down through the MA90, all the moving averages actually, the MA50, the EMA8, the EMA20, the MA90, and now we're currently in no man's land between the VWAP, the quarterly VWAP, and also we're heading towards the MA150. So there is a potential for more downside to go in QQQ before it can find some support. And the SMH also, same thing, broke completely through, although we are at the VWAP support right here. So they're a little bit more likely that we find that support and start chopping sideways, at least for tomorrow. That's why I plan on taking profits on the SMH puts, which we talked about hedging last week. NVIDIA earnings. I looked at hedging NVIDIA, hedging SMH, doing a August 26th expiration and also a September 20th expiration. If you took any of those trades at all of them are in profit. So that all the 26 expirations, those closed in profit, and all the 20th expirations are right now are probably at least at 100% profit. So this is a pretty good place to take profits and then start repositioning ourselves. We probably want, and if the portfolio is completely neutral, then we want to put in another tail risk trade or a hedge trade just in case things do break down. If this does continue downwards tomorrow without any sort of catalyst, that is not good news at all. That's speaking to investor and retail or consumer confidence and retail trader confidence. They're really buying into this September bad seasonality news or data. It's true, but it doesn't have to play out exactly like that. So it looks like there's a lot of like fear and momentum behind it. So it looks like it was played up a little too much by a whole bunch of analysts. So that's why I believe that we could probably recover from that. It's probably a 1 or 2 day thing, not a 1 week or 2 week thing. And then overall in September, whether or not it ends up being a down month, we'll see. A lot will depend on the Fed and their September 18th decision. And right now we're looking at, let's see if that changed since this morning. No, it's still the same. So we'll probably get an updated number tomorrow morning, but we're looking at still at 100% probability of a rate cut in September or the September 18th meeting. Right now, 63% at 25% rate cut. I really think this number should be maybe 20 to 25%, and then the 0 basis point cut should be, or basically keeping rates steady, should be 70 to 75, maybe even 80%. So we'll see. We'll see how all of that plays out. We're not getting great data. So for them to cut on September 18th, it's going to be a lot harder for them to justify right now. But we'll see with the employment situation. And then I think the following week, we actually get CPI data. So that'll come immediately 1 week before the rate cut decision. And we'll see. We'll see how all of these probabilities play out. So defensive sectors, if we're going to the long side, if we're going to the short side, it would be tech sectors, XLK, XL, or SMH. But tomorrow, the possibility of a small bounce, not bounce all the way back to highs, but at least a bounce into the 555 level or 560 level, that is a possibility. So it might not be a bad idea for a tail risk trade in one of the tech names. And so we can look at some stronger name tech. So anything that did well today is a potential candidate. So let's just go look real fast and say, let's say, apply to watch list XLK, close greater than close yesterday. I want to see anything that actually went up instead of down today. You can see that there's not very many of them. So we got SMCI, that's not going to count. That's on a very strong downtrend. This one, VeriSign, is looking okay, but it's like if it is, it's just very early stages of recovering. But look at Fortinet. Fortinet's looking pretty good, right? That was a downtrend. We had a gap up. This was probably earnings. And ever since then, it's been trending upwards. So let's take a quick look at Fortinet. Yeah, earnings gap up, and it already broke the high of that earnings range, and it just kept on moving upwards. A little reversion to the mean, to the EMA 8, and following that EMA 8 up. So if we get a recovery in tech tomorrow, this is going to be one of the strongest stocks, if not the strongest stock in tech right now. And so this could continue to move upwards. So I actually really like FTNT right now. Because one, it showed a lot of resilience in a down day today. If we get another down day tomorrow, it could also still show a lot of resilience. It might just chop sideways. And if we get their bounce and recovery, then Fortinet should lead the way up. So let's go ahead and do a quick option strat. I would only do short-term stuff right now. I wouldn't be doing anything a few weeks out or a few months out. So let's just do a Fortinet short dated. Let's go. That's only a couple of days. That's 10 days, 17 days. We'll go ahead and do the monthly expiration at the money, 77 call for $1.82. I'll go ahead and save that trade. This was a post-market. Okay. So the reasoning is, even though the indices look like they're breaking downwards, they haven't broken down that much. There's still some support in the S&P 500. There's not a whole lot of support in the QQQ, but at the current level, but there is a little bit lower. And since Fortinet went up today, it was one of the very few tech stocks that actually went up today on this super down day. Well, if we get another down day and we go into support, it doesn't have that much further to drop. So we would expect Fortinet to match its performance today, or at the very least go sideways. Fortinet was up 0.5%, and QQQ was down over 3%. And then if we do get that bounce in the major indices, or we just chop sideways, then Fortinet should, on a relative basis, it should do better than that. And so if we do get the bounce, then Fortinet should do really, really well. So that's that. Just a quick review of why I liked Fortinet, because normally that's outside the pattern, right? It's not XLU, XLP, XLV. So I was just explaining the reasoning behind that. So actually, because we're not expecting the indices to just keep on breaking lower, we expect them to at least pause a little bit before they go lower, or bounce a little bit before they go lower. Then that's what makes Fortinet a great trade for tomorrow, a high probability trade. We'll see how much profit potential there is, but at the very least, it's a high probability. And we would look for, on the option, even if we're up, we would definitely be out by the end of the week. We won't want that weekend risk. And we might even be out before the employment situation. So probably only holding until maximum of 2 days. And that's why this is okay of a trade. I wouldn't be doing this trade if we're trying to hold it 1 or 2 weeks out. Stay neutral, maybe slightly bearish, look for some tail risk trades, look for some hedges, and we should be in good shape for the rest of the week. So I'll see you tomorrow. Have a wonderful rest of your day.